Welcome back for another video. Talk about things. It is Thursday, the 4th of September, 2025, and there is a lot of talk in the AI and crypto and trading world about which are the best AI crypto trading bots and for consumers, that are already ready in the marketplace, which are obviously different from those that are pretty well developed, high-end business, you know, business driven, business user AI trading bots. And they may trade crypto, they may trade traditional assets, whatever they have, right? For example, there's a company that I'm currently running the marketing for, or building the marketing for, I should say, because it's still kind of a startup, and they don't really have anybody doing marketing, so they brought me on to do that. And they're precisely in this space of having a great MVP to show to people that are in the space of trading, investing, really investing more than trading specifically, but you could trade with it. And it uses AI to make decisions and, to run a strategy, and lets the user easily see how that strategy has performed, how it is performing. And it can be on traditional assets, it can be on crypto, it can be on whatever. Even meme coins, which are a form of crypto, let's not forget. And it lets you see, that their strategy generally works pretty well. And when it doesn't, you see that too. But in most cases, their strategy beats the markets. Now, why is it that an AI strategy has a higher probability of beating the markets, whereas manually run trades by most retail traders are not as likely to succeed? Well, it's because the AI bots are using leading information, much like we use at Alpha Trading, where we rely on the maths that are actually relevant to trading, the returns on investment, the mean of returns, the standard deviation returns, which is another way of saying volatility, which is another way of saying variance, which is another way of saying the spread of data around the mean, entropy, of course, the correlation between volatility and the data set, or the correlation between entropy and the AME, EPP, or any number of tools that we use, the RMLR, to know when an asset is in distribution or mean reversion, returns oscillator, or alpha laser returns to know when there's a divergence, right? Or if there isn't a divergence, if price is just continuing to follow returns to the upside or the downside, because that's pretty much what price action does, is it follows the returns most of the time. And that's what it does. When it doesn't, it's a bit of an outlier event, because it's pretty rare the price does not follow the returns. It does happen occasionally, but usually after a couple candles or so, price is going to do what the returns are doing. This is how that goes. So why are people interested in trading with AI crypto trading bots? And are they good to use? Well, as goes the case with pretty much any bot that you use, you need to understand, you really need to internalize this at a deep level. You cannot rely on bots to do everything for you, even if you think you can, right? You still need. Hey, buddy. Hey, buddy. Hello. Wow, what a good boy. Primla? Utrecht? Oh, like the city in Holland. Hello. You're such a good boy. You're a good boy. Oh, boy. He's a good boy. הכלב שלי האחרון היה סן ברנרד. איזה חמוד. הכל טוב לכם. יום טוב. See you, buddy. What a cute Rottweiler. Rotties are awesome. Dog named Utrecht, like the city in Holland. See? You can't use the AI bots with an inherent level of trust that they will never make mistakes. Because they will. And that's why you need to monitor them. You need to make sure that you manage your trades that use bots. Right? I've spoken with you about this in other videos. So some of the do's and don'ts of using AI trading bots are, don't think it's set and forget, because it's not. If you want to do set and forget with your investments, you know what the best way to do that is? Just DCA. Just DCA. But if you're going to have a tool that buys and sells for you, you're going to run into problems from time to time if you trust inherently that the bot will never fail, because it will. And that's why you do need to keep a close eye on what they're doing. And of course, here I'm talking very much, yes, of course, at the business level, for business users who know how to trade using AI power driven crypto trading tools or trading tools in general. But also, I'm talking about the consumers, the retail traders who want automated solutions and expect that automated solutions will work, perfectly, even though they won't. There will be mistakes. There will be losses. There will be things that the AI was not capable of handling. And you simply need to deal with that. Right? You simply need to accept the fact that the machines are not perfect. And you need to adjust your course accordingly. What does that mean? That means you need to run trades manually from time to time. It means you need to ensure that what you're doing with your trades is not just fully automated in some dumb way. You need to make sure it's fully automated, but with your ability to actually manage it correctly, right? To stop a trade when it's going against you. And to not just rely on these machines, as powerful as they are. And again, the vast overwhelming majority of trades should be won by AI trading bots that are very powerful. The problem is when they're not. The problem is when they fail to be successful trades and you end up losing capital on trades that you should have won capital on. and then you didn't pay attention to it. Before you know it, your position got liquidated. This is especially true for people who are trading using leverage. Because if you're not using leverage, you really generally don't need to worry about being liquidated. I mean, the market would have to completely crash to basically nothing for your position to get liquidated if you're just trading spot. But if you're not just trading spot, if you're using any kind of leverage at all, your money is inherently at a much higher risk profile, even with the most minimal amount of leverage you can borrow. Because as soon as you have some kind of leverage, guess what? You have a liquidation level that is not zero. And that means that there is a pretty decent probability that if left unmonitored, and unless you've chosen some kind of asset that's not going to zero ever, that if you leave it completely unmonitored, at some point it might very well go to zero, especially if it's something like a fairly illiquid crypto. Even if it's one of your favorites, doesn't matter. The fact is, a huge number of coins do go to zero. Now, there are exceptions where you'll find that many assets, do okay. They might still give you a loss. They might even still wreck you if you have the wrong leverage, but they'll survive and they'll have their highs again. Even if they don't beat their previous all-time highs, they'll still do okay. But the thing you need to keep in mind is, again, when you're using AI trading bots, you need to understand how their strategies work and not just see what's on the box and not read any further details, because you're putting actual capital at risk. This isn't like, buying a box of Wheaties and reading the product information on the box and then not really caring about what the manufacturing process is exactly. You care about the nutritional information and to know whether or not the food is safe. That's what matters. How it was made probably matters less. Now, of course, there are some people to whom it matters more. Some people who are very ethical about their food sources will only eat foods that they know where it was sourced from, and et cetera, et cetera. Okay, that's fine. Those are also part of the normal distribution, right? They tend to be outliers when it comes to food consumption, but they're not such outliers that nobody's ever heard of them, right? No, they're just outliers in that they're more selective in what they eat. Well, the same goes true for AI trading bots. You need to be that kind of outlier. Right? Yes, you absolutely can use AI trading bots. Your hands on a very good one that has a proven strategy and that has demonstrated its strategy for some time, preferably years, and you can see easily that the assets you like, it is able to outperform. Now, how do you normally do this? Well, normally, an AI trading bot system will have a kind of a dashboard, like a screen with the key information about the asset, about the performance of the asset without the strategy, and the performance of the asset with the strategy, and the performance of the asset with various different strategies. So it could be a conservative strategy, a more moderate strategy, a slightly riskier strategy, and maybe even a full-on degen strategy. It really depends on your risk appetite which strategy you should take, and on which platform you're using in terms of which strategies are available, and to evaluate each one and to see how the asset is doing compared to the strategy. Obviously, if you're day trading, then you want that to be able to look all the way down to the very low time frames to see how it's doing, and then to decide whether or not to use that strategy. What's very important also is to make sure that the AI trading bots you're using are in fact built with the same kind of highly relevant maths that I mentioned previously, right? Because if somebody builds an AI trading bot using traditional technical analysis tools, they're basically hoping that their customers are going to get wrecked, because that's what's going to happen by and large. How do we know that? Well, statistically, people who use traditional technical analysis get wrecked. The ones who consistently make money in the market, by and large, are the people who use the highly relevant maths of volatility, entropy, probabilities, and statistics, the VEPs, right? That's why they work for HFT firms and quant trading shops. That's why they run millions of orders per second on those bots in trades that last about 0.2 seconds each. And at the end of the day, they expect to have a modicum of profit. That doesn't mean they're always profitable at the end of the day, but generally speaking, they are. Otherwise, they wouldn't hold on to those jobs very long, because HFT firms are not in the business of losing money, and neither are quant trading shops. They're in the business of printing dollars or bitcoins or whatever their profit-taking asset is. And they're looking for ways to increase their capital, not decrease it. So that is the long and short of AI trading bots as an introduction, and how you can actually use them, and how you should not use them, which is frankly just as important as how you should, because like in all things, very often the don'ts matter as much or more than the do's. Right? What you don't offer matters as much or more than what you do offer, because it lets people focus on what you actually do offer, and they don't just imagine other things that you may offer if you're clear about what you don't do. And very often it's easier to say, we don't do anything except, and then you list the things you actually do. And make that clear. So similarly, do's and don'ts about trading bots are do's and don'ts about usage of them. Which ones you should use, which ones you shouldn't use, what to look out for, as I've given for you example, the kind of math they use, and the kind of analysis they use, and the kind of strategies they run, what they show you in the dashboard, what they show you in your profile, account information, how up to date it is, how low can you go in terms of the time frame if it's for intraday trading, and if it's just for high time frame investing, how accurate are the strategies across all the different time frames it runs. These are, again, things to keep in mind. These are big, important things to consider. And it is, in fact, important to consider these things because precisely if you don't, it can cause you a lot of problems. So, okay, having said all that, as always, if you do want to learn how to actually trade yourself and not rely on bots, although bots, like I said, can be very powerful and very effective if you know what you're doing, but they have to be, again, industrial quality bots. They cannot be, if you think you're going to trade with a bot that costs you $50 a month and you're going to make money consistently and reliably, I'm sorry to tell you, you're kidding yourself. The bot services out there that cost very, very low amounts of money are usually running traditional technical analysis tools, and they do fail a lot. And I know plenty of people who've used them, and when they first use them, they're all excited because they'll be like, "Wow, I made $50, I made $200, I made 10% gains, I made 20% gains, whatever." And then the next day they'll tell you, "I got liquidated on my last trade, but it's okay. I'm back in another profitable trade. I'm making it back." And then they tell you after a couple of months, "Yeah, I stopped using it because I had to spend as much time or more than I normally would managing my trades on these bots than if I just run the trades manually." And that's what inevitably happens with the low rent bots. They're not able to compete with the high end bots. You can get access to high end bots. That's the thing. There are an increasing number of huge companies offering accredited investors and other people access to trade with these AI systems. And there are also a number of startups who have built very high end systems that are definitely usable. But you have to have the capital for it. These things are not free. And they're not cheap. And the reason they're not cheap is because they're helping their customers make a money printing factory, and it comes at a cost of resources that is fairly high. The computing power itself is very expensive. The people who run the machines are high skilled, highly valued employees, or company founders, or whatever. They're people with very high talents. So it is unlikely they're going to work for little to no money, because they could just as easily go somewhere else and get paid a tremendous amount to use their brains to do something profitable elsewhere. And especially in the world of financials and trading and investing, which is all about the money, you're not going to find people willing to work for literally nothing. Maybe they work for equity, maybe they work for a salary, maybe they work for a combination. You're going to work for something. And the people who are at the top end of their game, they realize their value. They know their value. They know their worth in the marketplace. They know that people are willing to pay for their skills because they have highly marketable skills. For example, I can program automatic systems, right? I can program bots to do things. I can program various applications, etc., to automate processes. Or I can build those systems. I know that has a certain value in the market, right? I know there are many people who can do this, but not everybody can do this. That's why it has a certain value. Now, in theory, anybody with a brain and the time to learn could, in fact, do this. In theory, but in reality, it's not. It's not reality. Most people will not spend the time to learn how to do these things because either they can't, or they're too tired, or they don't have time, or whatever. A million reasons why people don't do necessarily what they could do that might improve their lot in life. Right? There's a lot of reasons why people don't do the things that they could do. And they're not invalid reasons. Even being too lazy is a perfectly valid reason for a lot of people. Not everybody has the motivation to not be lazy. Or people just might be in a situation where they can't improve their lot in life because forces beyond their control are limiting them. This also is a very big reality for a huge chunk of the population, which is why people who have certain talents have achieved a certain value in the marketplace. That doesn't mean that they necessarily all have a job that pays them that worth. Right? There are plenty of people who are very qualified to do something who cannot find work, even though they're extremely qualified to do something that has a high value in the marketplace. But for whatever reasons, they can't land a job, or they can't land a client, or they can't successfully start a business, or whatever it might be. Okay? There's a lot of reasons. The point is, right, these systems are not cheap, these AI trading systems. Especially not the good ones, right? Like I said, if you want to rent a $50, $100, even $500 bot and give it a go, good luck to you. You're probably going to lose that money. You're probably going to lose the money of the subscription. It's probably just throwing it down the drain. And you're probably going to lose money trading. And you would have been better off going to a casino, spending your money, and having a good time. Like, I'm not even joking. Yeah, you would have been better off going to have a bunch of fancy meals with your loved ones, spending the money, and having a good time, and having some nice memories. Instead, you're trying to trade in highly volatile markets with highly volatile assets that you don't really comprehend how to trade. And you think you're going to be profitable. Well, my friend, it doesn't usually go well for most people. Because if it did, again, then most people would do it. And they don't because of the inherent risk. And when you automate that risk with an AI trading bot, you increase your risk factor exponentially, usually, especially once you start using leverage. Because then any little mistake it makes can cost you dearly. Even if you tell it, don't ever let my trades lose more than 1%. Okay? Well, what if it's wrong 100 times in a row? You're saying it's impossible to happen? It can happen. It might get some mental glitch. It might get some computer glitch with a cache issue. And it might be literally stuck on a cache that it cannot clear from its memory temporarily. Some kind of internal error. Maybe access to an API is failing. Maybe user permissions are failing. Who knows what? There could be any number of problems that could cause a computer to make a mistake more than 100 times in a row, especially when it's running very fast trades. Right? If it makes millions of trades in a second, You think you can't make 100 mistakes during those million trades in a row? It very well might. Now, if you're trading millions of trades per second, you're actually running a bot at like an HFT firm or a quant shop, and yeah, you're not waiting for a whole percent. Yeah, you're taking the most insignificant moves and taking profit on them because you're already paying high fees and everything else for connectivity and for order flow, other kinds of information that the retail trader is not getting access to. So and you don't need to make 1% or even a half a percent to take profit on a trade, or even a third of a percent. Right? You can take 0.01%, 0.02%, and be in profit. You do that a million times in a second, and you're doing fine. And if you lose even 30% of those, but you win the other 70%, you're doing okay. If you win 90% and you lose 10, you're doing fine. Right? And that's why it's important, even when you are running those high-powered bots, as people at HFT firms and quant trading shops do, that they manage their trades, right? Yes, it's true. A lot of traders do set their trades and then kind of, leave their desk and go play golf or take a long brunch lunch and then come back in the afternoon, check on their trades, maybe adjust some things, maybe not, and then usually shut down their operations by the end of the day and then come back next morning and start it over again. But real professional traders trading this kind of trades, yeah, they don't do that. Sure, there are some that do. I get it. A lot of them come from the traditional TA world where they think they can just swing trade or take long trades and not worry about the 10 or 15 minutes because they think, oh, well, the 4 hour says this is going to happen, so I'll just let it slide. Well, what if it slides against you and it doesn't come back after 4 hours or 8 hours or 12 hours or 16 hours or 20 hours or 24 hours? How many days are you going to swing trade? How long are you going to go sleepless while you're losing money? So the same holds true whether you're using AI trading bots or not. You need to manage the trades yourself, even if you have an automated system that runs remarkably well. You have to look at the trades. You have to keep an eye on them. Like, this is important because you're actually managing real capital. And you don't want to get wrecked relying on systems to do the work for you. Hey, doggo. Hey, buddy. You want to say hi? I know you want to say hi. Okay. Yeah. Dogs are hilarious. All right, folks, that's going to do it for now. Do I like black? What? The question you wanted to know, I think that AI agents can help with AI automation. Absolutely, AI automation can be helped with AI agents, but even so, you have to be careful with it. And I did, by the way, make a video of the previous live stream I did about an hour ago, addressed this very topic using agentic AI, right, which is using agents to do multiple decision-based processes for you. Like they're actually carrying out decisions. They're making decisions and carrying them out. And there are ways to manage that properly and ethically. Go check out the last live stream I did previous to this one. do I like? Anyway, that's going to do for now, folks. And I'll talk to you guys later. Peace.